I don't know what that is. Let's call it 20 miles. Out here, I would have, depending on which way you're faced, but just the way my brain works, I'd have Bithlow. I'd have Christmas. Geneva. Mims. Over here, I might have, where are my Claremont folks? Hook me up with some, no, I'm not down, I'm not there yet. Oak, there's Oak something. Oakland? Yeah, there we go. Oakland and Groveland. Okay. So that would be east, that would be west, this would be south. So let's just come down here and we'll just say Davenport, etc. Bartow 4, baby. I hear those commercials all the time. Land O'Lake, is that down there too?
No, Land O'Lake is
okay.
north.
Okay, anyhow, that's good enough. And up here, I guess I could have like parts of Deltona. Travis, is there anything north of Deltona before you get to Port Orange?
No.
Just kind of like dead space, isn't it?
Swampland.
Perfect, that area.
Yeah, that area.
Yeah, well, we'll just call this halfway Deltona, Port Orange. It's where my cell phone doesn't work, I can tell you that much. So, United States Department of Agriculture allows 100% financing. It's an A loan, so we know primary homes only, unless it's a refinance, blah, 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 blah. They have two things though, income restrictions and geographic restrictions. United States Department of Agriculture, it's also called RD, Rural Development, Rural Housing. Okay, the maps are drawn each time the census is done. There was a time frame, 2009, 10, 11, and 12, the census hadn't been updated. So the census hadn't been done since 2000. That was 21 years ago. Well, 21 years ago, places like Waterford Lakes and Avalon Park were rural. 21 years ago, or actually just 9 years ago, we were using USDA loans to finance homes in Avalon Park. No more, right? So if you were to pull up a map, you would see that from Orlando proper to about 15 to 20 miles is not going to be deemed rural per the most recent housing census. Areas that are Davenport possibly, Bartow, Mims, Geneva, Christmas, Bithlow, that area between Deltona and Port Orange. And by the way, parts of Deltona may be, and parts of Port Orange may be. They probably wouldn't be in city proper, they'd probably be in the county. And then if you go out west, Lake County towards Claremont and Winter Garden and all that, Oakland, Groveland. Obviously, if you start heading out to Sorrento, right, maybe parts of Apopka. Oh yeah, Leesburg, Eustis, Ocala. Those are gonna be deemed areas that are rural. So first we start with what makes you eligible, because there's a double eligibility. Is the area rural? Someone in front of their laptop or their pocket computer, Google USDA rural housing map. What you'll find is going to be like a pretty serious looking website with like a government IP address or whether it's called HTTPS. Yep, so you'll see like https:// eligibility.sc.egov.usda.gov. Right, that was my first thing that came up in my Google. So if I went there and I just clicked around, it would allow me to start typing in addresses. It'll allow me to drop pins and start looking at areas. So the first thing I need to figure out is the area you're looking in, ma'am or sir, even eligible? Because if I'm talking to you, you tell me you want to live in College Park. If you tell me you want to live in DeLand, I may be like, hey, maybe not DeLand, but have you thought about Sorrento? Maybe not DeLand, but have you thought about the area just north of Deltona? Right, so you have to be eligible from a geographic standpoint. And you also are going to have income restrictions. So like our down payment assistance loans, you're going to have income restrictions, all based on your household. So households of 1 to 2 versus 3 to 4, 5 plus. The larger your household, the more your income can be. But, this is a huge but you have to understand when doing a USDA loan. When it comes to being eligible, not qualifying, we're going to look at household income, right? So it's me and my wife. My wife has terrible credit, so we're keeping her off the loan, but she works. And her sister Cam lives with us, and Cam's 2 kids live with us. So our household size is me, my wife, Cam, and her 2 kids. We're 5+. I don't want my sister-in-law on this loan with me. I'm buying this damn house. And my wife can't go on it because she has terrible credit. That's cool because, I make $84,000 a year, and 84 is kind of pushing the limit. But I'm not going to be eligible because my wife earns another $42,000 a year as a school teacher, and Cam's earning another $48,000 a year as a nurse, and our household income is well over $100,000. And when I looked up a household size of 5+, it might have said that the maximum was $96,000 or $94,000. So you have to understand on a USDA loan, not only do you have to fit the geographic, you also have to have an income. And we look at, from an eligibility standpoint, household income. Now, something with the household income that's key to know, because this is all calculations that you all have to research and look up. Please know that you can deduct, from the eligibility standpoint, you can deduct childcare. Well, Cam sends her 2 little rugrats to La Petite. That cost her $1,200 a month. All right, cool. So I can take that $1,200 a month off, as long as I can prove it, right? I can't just pull it out of my rear end. I have to get a letter from La Petite, probably show some Venmo payments or credit card statements, something to show that is an expense. So it's key to know that you're going to have an eligibility standpoint, and you're going to have a geographic issue. It is 100% financing. So we'll talk about the payment for like 2 minutes. The last little caveat that you should know, it's contrary to everything you've been taught about this industry. In this industry, we love assets. Even if you don't use it, we love reserve assets, right? That's called a compensating factor. Hey, my borrower is only putting 5% down, but they got all this money in their 401k. Oh, let's use it to prove that their strength, make the strength of their file greater. Man, USDA does not want to see assets. If you have assets, USDA will tell you, use FHA, use conventional. We're not here for people that have assets. Now, they're not going to make you go liquidate an IRA, or they're not going to make you borrow against a 401k. But when they see that you have 20 grand sitting in your Bank of America checking account, you know who learned that the hard way? This guy. Oh, and I fought tooth and nail. It was a realtor I was doing a loan for. I told him that I could help him purchase a home using USDA. We submitted his bank statements. He had 30 grand, and USDA turned me down. I argued that, look, he's a realtor. His income is like this. He needs those reserve assets. They said, cool, you're right, but that still doesn't make him eligible for our product. So another cool thing that you have to know about USDA, we underwrite it, we approve it, but it doesn't fund until they review our work. Well, USDA has 2 ladies who've been doing this for 40 years that work out of the RD office, Rural Development Office, that they approve these loan files. Could take them 5 days, it could take them 25 days. You honestly don't know that when you're taking the loan app. All you can do is you can go onto the Rural Development website, you can call the hotline number, and they will tell you, we're currently doing files from March 31st. Okay, well, about a week, based on what today is. But just because they were, what if you and 1,700 other people all dump files on them? They could easily go to 3 weeks. So I advise anyone doing a USDA loan, look, it's going to be a 45 to 60 day close. It's not that it's going to take me more than 21 to 28 to get your file processed, underwritten, and clear to close, but I can't fund this until we send your file to Rural Development so they can approve our work. Because Rural Development, they ensure before funding where VA and FHA insure post-funding. Like when I use the example to Travis about Waterstone having a loan that the VA wouldn't insure, all because we allowed the veteran to pay a non-allowable fee, that's because the VA and FHA insure our loans after the fact. RD doesn't, Rural Development doesn't, USDA doesn't. It's all the same, by the way, RD, USDA. So in that process, you underwrite it, you fund it, then you send it off. Things to know about rural development. I'm gonna need the computer people real quick. It's an A loan. So government, every government loan has an upfront fee. We talked about VA, right, for the funding fee. FHA has what's called an UFMIP, and I know we didn't get a chance to talk about calculating FHA payments, so it's still on the docket, but they have upfront mortgage insurance premium. So when you're factoring what someone owes on an FHA loan, FHA has 1.75% tacked onto the loan amount. USDA has their own guarantee fee, and then they also have a monthly fee. So just like FHA has an upfront mortgage insurance plus monthly mortgage insurance, VA only has an upfront, no monthly, and Rural Development has an upfront and a monthly. But their monthly is way less than FHA. So anyone know what the USDA guarantee fee is? But here's what's something that's weird about USDA. The guarantee fee we know is 1%. The monthly is 0.35%. So to factor this, let's just use a $200,000 loan amount. Smaller loan amount because we're buying in rural areas where people can go to find affordable housing. If this was a FHA or a VA loan, to figure out what the guarantee fee was, we would actually take 200,000 and we would just times it by 1%, right? And it would tell us that it's $2,000. That's not how RD does, or Rural Development does their calculations. Yeah. They want it to be 1% of the total loan amount. So you have to factor what's your total loan amount. Do this, take $200,000, divide that number by 0.99, and what that'll give you is a loan amount equals 202,020. Now when you subtract out 200,000, it'll actually tell me that the guarantee fee is $2,020. Here's their thought process behind it. Take 202020, now take 1% of that number. It's 2020, which leaves you a $200,000 loan amount. It's a way to reverse engineer their numbers, but if you did it the way that you do VA and FHA, you'd actually be off by 20 bucks. Just food for thought. So just like with USD, or just with FHA and VA, you can finance this in. That is financed in, it's not paid out of pocket. So this is what their loan amount would be. Although they're buying the home for $200,000, they are gonna finance this. And then on the monthly, and again, we're gonna cover this in detail in FHA because you should know it for FHA. Just know the monthly, the way I figure it out, is gonna be based off of the purchase price, not this loan amount, this. So I would take $200,000, times it by 0.35%, which is $700. But would someone ever pay $700 a month? No, it's called an annual fee for a reason. To figure out the monthly, I take my 700, I divide by 12. So divide that by 12, and it gives me 58.33. So in this case, 58.33. That's not bad. That's a small price to pay for a 100% financing loan.
Yeah.
You know?
$200,000. Cheap.
Yep. And we're going to do a whole class on calculating FHA payments. If you can understand how to do an FHA payment, VA will make sense and USDA will make sense. The problem with USDA is you're not going to do a lot of them. You're just not. And the problem with anything, until you do a lot of them, you can't get good. I mean, I'm coaching 4 individuals right now in another business. They're in the real estate investment business. And man, they're putting together systems and processes that they're unbelievable. The problem is they can't buy enough homes right now to get good. Right? Because like they keep missing things. I'm like, yeah, you're going to keep missing things if you're only getting one at bat every 3 months. I go, you guys start buying 2 or 3 homes a month, you'll quit missing things. It'll allow you to work your systems and your process. So like this was diving too deep into USDA because do you have to know how to calculate a payment? I mean, are you going to do one a month? Now back in 2009, we were doing one a month. It was our holy grail. I remember I figured it out. Brandy Velez was our account rep. Brandy actually taught me. I then taught Mike Smalley. We then taught, David. Unless you're developing a relationship with a builder in a rural area, a realtor in a rural area, or you're in an open office in a rural area, you're not going to do a whole lot of USDA. And even those that did, Sue Botello 10 years ago was the #1 or #2 USDA loan officer in the state of Florida. Sue runs our Panhandle region. Joe Fowler, who used to work at Waterstone, was the #2. They just don't do them anymore. Either they're not needed or the areas that they were doing them are no longer deemed rural. But that is, in a nutshell, a USDA loan. There's a guarantee fee, there's a monthly fee. It has geographic restrictions, it has income restrictions, all of which you can look up. Right? I can't remember them because I don't do enough VA loans. I don't do enough USDA loans. I'll just have to research it every time.